Hey, what's going on? This is Jake with Walk-Squawk. We got mixed calls for the Open here. We saw Washington and Beijing had low-level meetings over the weekends, and also they had like the CEO of Cargill was there as well. So both sides, still feeling the effects of tariffs, and they're trying to work through that here and get something rolling here. Also, you had the USDA's latest outlook on Mexico's corn production for the 25-26 season is expected to increase to 24.5 million metric tons, up from 23.7 million metric tons. But then you have their imports are expected to drop a little bit from 24.8 million. They have it at 24.8 million compared with 25.5 for 2024. Additionally, sorghum production is expected to increase while wheat production is expected to decrease. And then you have in South America, Brazil production is expected to rise, with farmers expected to plant more area and produce a total of 173 million metric tons for the 25-26. This is up from 169.5 million metric tons in 24-25. Brazil's soybean exports are expected to hit a record high of 112 million metric tons, up from 108.3 million metric tons this year. On the ground, Brazilian farmers have harvested 73.8% of their expected soybean area for 24-25 compared to 69.3% same time last year. So they're making a solid pace there with Brazil's growing export numbers. It's definitely a trend worth watching there. Let's go look at Canadian politics here. Turning to Canada, Prime Minister Mark Carney has called for a snap election on April 28th. The reason behind this is to secure a strong mandate to address rising tensions with the U.S., particularly over tariffs and ongoing threats to Canada's sovereignty by United States President Donald Trump. While these practical developments, it's important to keep an eye on how Canada's agriculture policies and trade relations might evolve in the months ahead. Now, let's just talk a little bit about weather here. Rain in northern Brazil is struggling to pick up, though the best chances for moisture are expected this week. Meanwhile, in the U.S., wheat growing regions in the southern 2/3 of the plains are still facing dryness. Relief expected over the next 2 weeks. In Brazil, the second crop plant area in the southern half remains too dry, while the northern part is doing better. Over in Argentina, the heart of the growing area saw improved soil moisture recently, but northern regions are trending drier, something to keep an eye on as it could affect future crop yields. So looking at the U.S. basis map, moving on to basis, Gulf corn was firm again on Friday. We saw a quick ship bid in Blair, Nebraska, following last week's blizzard. Illinois river barge went up by 10 to 35% for the period through late April. In St. Louis, up north on the Mississippi, we saw slight increases for next couple of weeks, which could support market dynamics in the near term. Now we have the CFTC COT report. Reported, at the ending of March 18th, managed money was bigger sellers than expected in corn, soy meal, bean oil, and SRW wheat. On the flip side, they were surprising buyers of soy meal. Interesting, their largest positions continue to be net shorts in HRS, HRW wheat, meal, and SRW wheat. Keep an eye on those positions as managed money continues to adjust their market strategy, potentially impacting prices in these commodities. So that's just a quick little wrap up here for the weekend. As always, stay tuned for more insights and market analysis as we navigate the week ahead. Don't forget to like, subscribe, and hit the notification bell to stay updated with all the latest. Catch you on the next video.